Mortgage denied. I found the notice sitting on the kitchen counter late Friday afternoon. At first, I honestly thought somebody had attached the wrong report to the file, because 3 weeks earlier, the same lender had already approved the loan. The inspection was finished, the appraisal was finished, the closing date was already on the calendar. As far as I knew, everything was moving forward. So I sat down at the counter and started reading the notice again. Then I read it a third time. The documents were almost identical. Nothing about the property had changed. Then I noticed I didn't remember seeing those words before. They were definitely not in the original file. So I pulled the older paperwork out of a moving box. I placed both documents side by side. The original report listed the property as Zone X. The revised report listed the same property as a special flood hazard area. I went back to the first report, Zone X. Back to the second report, special flood hazard area. Same house, same driveway, same mailbox, same surveyor. Two completely different answers. That was the first thing that didn't match. I remember staring at both pages for a while. There are some problems your brain knows how to process. A delayed closing, additional paperwork, a higher insurance bill, even another inspection if somebody explains it first. But a mortgage denial doesn't feel like a review. Not on a house that had already been approved. It feels like somebody changed the rules after the game was already over. 3 weeks before the mortgage denial, Ryan accepted a position with an energy contractor outside Baton Rouge. The offer letter had already been signed. The start date was fixed, 2 Mondays away. The decision wasn't provisional anymore. The move was happening. Emily printed the offer letter. She attached it to the refrigerator with a magnet, right beside a list of deadlines. Moving truck, utility transfers, mail forwarding, storage reservation. Every item on the list already had a date next to it. At the same time, the search for a house appeared to be finished. River Ridge wasn't the first property they looked at. It was simply the first one that checked every box. The neighborhood was quiet, the commute worked, the numbers worked. The purchase agreement was signed, the earnest money deposit had already been transferred. Walking away would no longer mean losing time, it would mean losing money. The inspection came back clean, no structural concerns, no drainage concerns, no major repairs. A few days later, the appraisal arrived. The value supported the contract price. Nothing inside the report suggested the transaction was in trouble. The lender reviewed the file. The lender approved the file. The closing date was scheduled. Once that happened, everyone involved started acting as though the sale was already complete. The seller stopped showing the property. The moving company confirmed the reservation. Ryan's employer confirmed the onboarding schedule. Even the postal forwarding request had already been submitted. One decision triggered another, then another, then another. Every commitment made the next commitment harder to reverse. By the beginning of the third week, the guest bedroom was full of sealed boxes. The kitchen was half-packed. Important documents sat inside labeled folders on the dining room table. Inspection report, appraisal, insurance quotes, loan approval. Everything appeared ordinary. That was the strange part. Nothing looked wrong. Nothing looked incomplete. Nothing looked delayed. The file had already moved through inspection. It had already moved through appraisal. It had already moved through underwriting. As far as Emily could tell, the difficult part was over. Looking back, that assumption only existed because she hadn't seen the revised report yet. 3 weeks earlier, the property had been approved. Now, the approval was gone. Not because the house changed, not because the contract changed, not because the appraisal changed. Because somewhere inside the file, one answer changed. And nobody had noticed it until Friday afternoon. Emily did not start with the flood map. She started with the folder. It was still sitting on the dining room table, right beneath a roll of packing tape, a marker, and 3 change of address forms. The folder had followed them through the entire moving process. Kitchen counter, dining room table, living room floor, back to the table. Nobody had treated it like evidence. It was simply the closing folder. Inspection report, appraisal, insurance paperwork, loan approval, flood determination. At that point, nobody expected danger. Lena was already talking about the final walkthrough. The moving company had been confirmed. Ryan's start date outside Baton Rouge was now 11 days away. Everything about the move had been built around that address. And now, that address was sitting inside a mortgage denial notice. Emily opened the original flood determination. Near the bottom of the page, a small box. Zone X. That was the version she remembered, the version nobody had questioned. Then she opened the revised report. Same property, same address, same lender. Different answer. Special flood hazard area. Emily placed both reports side by side on the table. Zone X, special flood hazard area. Zone X, special flood hazard area. The house had not moved. The driveway had not moved. The mailbox was still standing in the same place near the street. Nothing had changed during those 3 weeks. Her first assumption was simple, a paperwork mix-up. Documents get uploaded into the wrong portal. It happens. So she checked everything. The address matched, the parcel number matched, the lender file number matched. This was their file. Then she noticed the issue date. The revised report had been created after the original approval. Somebody, or something, had looked at the property a second time and reached a completely different conclusion. Emily opened the FEMA map website. The site loaded slowly. The search function failed the first time. Then it placed the pin on the wrong section of the road. She tried again, zoomed in, zoomed out, entered the address again. Eventually, the property appeared. Zone X. She checked twice, then a third time. Zone X. Now she had 3 pieces of information on the table. Original report, Zone X. FEMA map, Zone X. Revised determination, special flood hazard area. 3 documents. The surveyor became the next logical call. He had physically visited the property, measured it, signed the certification. He was an actual person who had stood on the land. The surveyor reviewed the file and called back later that day. The answer was short. Nothing had changed on his end. The property remained Zone X. No revision, no correction. For the first time since Friday, Emily felt a sense of relief. Maybe the problem really was just a bad report. Maybe underwriting simply needed the right documents. This could still be fixed. She collected everything. The original report, the FEMA map, the surveyor's certification. She sent it to underwriting. The email was polite, short, professional. Just a request to review the file against the supporting documents. Then she waited. The house felt strangely quiet. Boxes lined the walls. Cabinet doors stood open. The moving company was still scheduled. The closing date was still on the calendar. Everything remained exactly where it had been, except the mortgage. An automated response arrived first. Documents received. Nothing else. The next morning, underwriting responded. The message was shorter than the one Emily had sent. There was no explanation, no revised map, no acknowledgement of the surveyor. Just one sentence. The lender will continue to rely on the revised flood determination currently associated with the loan file. Emily read it twice, then a third time. That was the moment the problem changed. Until then, she thought she was correcting an error. After that email, she realized she wasn't. The FEMA map didn't matter. The surveyor didn't matter. The original report didn't matter. The lender had already decided which answer it was going to believe. And the mortgage remained denied. The lender's response arrived Tuesday morning. Not from the loan officer, not from the surveyor, not from anyone Emily had ever spoken to. The message came from underwriting, a department that had become the most important part of their lives, even though nobody could explain exactly who worked there. The email was short, almost aggressively short. The revised flood determination remained active. The file would remain under review. No additional explanation. Emily read the message twice, then forwarded it to Ryan. Neither of them understood what had actually happened. The surveyor had not changed his opinion. The FEMA map had not changed. The property had not changed. Yet the loan had somehow changed. That afternoon, Emily called the lender again. The call started with a recording, then another recording, then a menu, then another menu. Eventually, she reached somebody in customer support. The representative reviewed the file, placed her on hold, returned, placed her on hold again. The answer never changed. The file remained in underwriting review. Emily asked whether the surveyor certification had been received. Yes. She asked whether the FEMA map had been reviewed. Yes. She asked whether the revised determination could be challenged. The representative could not answer. By Wednesday morning, the entire conversation had become strangely circular. Every document pointed one direction. The revised determination pointed another. Nobody would explain why. The moving boxes were still sitting around the house, half packed, half unpacked. The closing date was now less than 2 weeks away. Ryan's start date in Baton Rouge had not moved. The moving company had not moved. The seller had not moved. Only the mortgage had stopped. That was when Lena became concerned. Until then, she had treated the issue as an administrative delay. Now she started calling people herself. The listing agent, the lender, the title company, anyone connected to the transaction. Every day, the file remained frozen, increased the chance that the closing would collapse. Late Wednesday afternoon, Lena called Emily back. The conversation lasted less than 5 minutes, but one sentence changed everything. The lender was evaluating additional risk exposure connected to the property. Emily asked what that meant. Lena didn't know. The lender hadn't explained it, but she had heard similar language before. Sometimes additional risk changed insurance requirements, sometimes it changed reserve requirements, sometimes it changed the amount of cash a borrower needed before closing. The moment the call ended, Emily opened the lender's portal. She wanted a number. How much cash? $500? $1,000? $5,000? The portal loaded slowly. She clicked through the file. Inspection, appraisal, flood determination. Then she noticed something new. Estimated cash to close. Updated. No amount appeared next to it. The field was blank. Just the word updated. Emily stared at the screen. That was the first time she understood that the flood problem was becoming a money problem. Not insurance. The uncertainty started becoming its own problem. Not knowing was worse than receiving bad news. At least bad news gives you something to fight. This gave them nothing. Emily refreshed the portal so many times that the login session expired twice. Each time she logged back in, the same blank line appeared. Estimated cash to close, updated. No number. Friday morning, the lender finally updated the file. An automated notification appeared. There was still no amount, no explanation, no calculation. Just the warning. The flood classification was no longer just a disagreement between documents. It was starting to change the economics of the purchase itself. And nobody could tell them how expensive that change was going to be. By Friday evening, the boxes were still stacked in the hallway. Ryan's first day in Baton Rouge was getting closer. And the only new information they had received all week was a single sentence. Additional borrower funds may be required prior to closing. They still didn't know how much, but they knew enough to be afraid of the answer. The number appeared the following Monday. Not in an email, not during a phone call, not in a conversation with the lender. It appeared inside an updated loan estimate. Emily almost missed it. The document looked nearly identical to the previous version. Same property address, same purchase price, same closing date, same names. At first glance, it looked like another routine update. Then she reached the bottom of the second page. Estimated cash to close. The figure was higher. Much higher. She checked it again, then compared it against the earlier estimate. The difference was just over $26,000. For a moment, she thought she had opened the wrong file. The increase made no sense. Nothing about the transaction had changed. The seller had not raised the price. The inspection had not uncovered major repairs. The appraisal was still valid. The house was still the same house. Yet somehow, they now needed more than $26,000 additional dollars just to reach the closing table. Emily opened the previous estimate, then the new one, back and forth, again and again. The numbers refused to change. $26,000. It wasn't a fee. It wasn't a penalty. It wasn't a second loan. It was cash. Money they would need to provide themselves. She called the lender immediately. The loan officer sounded uncomfortable. Not surprised, not confused, uncomfortable. He explained that underwriting had adjusted the file after reviewing the revised flood determination. The lender now required additional borrower equity before closing. Emily asked what that meant. The explanation arrived in pieces. Risk exposure, reserve requirements, collateral protection, loan-to-value adjustment. The terminology changed. The conclusion never did. They needed more cash. When the call ended, Emily sat quietly at the kitchen counter. The amount felt impossible. Not because they had failed to save, not because they had spent recklessly. They had spent years building their down payment. Years. The original mortgage had already stretched their budget. Now the numbers had changed in the middle of the transaction. That evening, she cleared a small section of counter space and opened her laptop. Most of the counter was covered with packing supplies. A roll of tape, shipping markers, stacks of folded cardboard. The house no longer felt settled. It felt dismantled. Most of the kitchen cabinets were empty. The plates had already been wrapped and packed away. The coffee maker sat on the floor beside a tower of labeled boxes. For several nights, they had been eating takeout because half the kitchen was already gone. The move wasn't something they were planning anymore. The move was already happening. Emily pulled up every account they had. Savings, checking, emergency fund, everything. Then she opened a legal pad and started writing numbers. Available cash, closing costs, moving expenses, unknown expenses, potential reserves. For hours, she moved figures from one column to another. Every version ended the same way. They were short. Not bankrupt, not ruined, but short enough to lose the house. Ryan approached the problem differently. He opened spreadsheets, built scenarios, removed expenses, delayed purchases, crossed items off lists. Furniture, appliances, repairs. Everything that wasn't essential disappeared. The gap remained. The following morning, Lena called. By now, she sounded different, less optimistic, more practical. She had seen deals fall apart over smaller problems. Because the issue wasn't simply finding $26,000. The issue was finding $26,000 quickly. The seller was still preparing for closing. The title company was still preparing for closing. The lender was still moving through its timeline. Nobody inside the transaction had paused their schedule. Only Ryan and Emily had stopped moving. Everything else continued exactly as planned. Later that afternoon, Emily returned to the revised loan estimate. This time, she stopped looking at the final number. Instead, she compared the structure of the loan itself, line by line, column by column. And that was when she noticed something strange. The lender had not increased the purchase price. The lender had changed how much of the purchase they were willing to finance. The difference seemed small on paper, but the effect was devastating. The house had not become more expensive. The lender had simply decided it was worth less, at least to them. For the first time, Emily understood what was happening. The bank wasn't asking for extra money because the property cost more. The bank was asking for extra money because it wanted less risk. Every dollar of reduced risk for the lender became another dollar Ryan and Emily needed to provide themselves. The flood determination was no longer sitting inside a separate folder. Now it was connected directly to their savings account. Directly to the closing. Directly to Baton Rouge. Directly to every plan they had already made. Late that evening, Emily closed the laptop and looked across the room. Half the house was already gone. Not sold, not moved. Gone. Packed into cardboard boxes waiting for a future that suddenly felt uncertain. For the first time since the mortgage had been approved, a question entered her mind that she had never considered before. Not whether they wanted the house, not whether they could afford the monthly payment, whether they could even reach the closing table at all. For the first time in nearly 2 weeks, somebody finally delivered good news. Lena called shortly after lunch. The seller had agreed to extend the closing date. Not indefinitely, not by much, but enough to keep the transaction alive. Emily wrote the new date down on her legal pad, right next to the $26,000 calculation. Then she crossed out the old closing date. For the first time, it felt like something had moved in the right direction. The transaction wasn't dead. Not yet. The extension gave them time to understand the numbers, time to evaluate options, time to figure out where the additional cash might come from. When Lena finished explaining the amendment, she sounded relieved. The listing agent sounded relieved. For several hours, Emily allowed herself to believe the worst part was over. Then, another email arrived. This one came from the lender. The subject line mentioned the mortgage rate. At first, she almost ignored it. The flood determination had consumed so much attention. Interest rates had become background noise, something they had already solved weeks earlier. Or so she thought. The email explained that the existing rate lock would expire. It would run out before the new closing date. Emily read the message again, more slowly. The original mortgage approval had included a locked interest rate, a temporary agreement protecting them from market changes. At the time, it had seemed like a routine detail. Now, it suddenly looked important. Very important. She called the loan officer. The explanation was painfully simple. The lender could not guarantee the original rate beyond the lock period. If the transaction closed after the expiration date, the loan would need to be repriced, using current market conditions. Emily asked how much difference that could make. The loan officer hesitated, then gave a range. The answer wasn't catastrophic. Not immediately. And that was almost worse. A slightly higher rate sounded manageable, until she looked at the numbers. The increase wasn't measured in a single payment. It was measured across 30 years. A small monthly difference became thousands of dollars, then tens of thousands. The flood determination had already increased the amount of cash required before closing. Now, the delay was increasing the long-term cost of the loan itself. The two problems were starting to feed each other. That evening, Ryan sat at the kitchen counter with a calculator. Neither of them spoke. They simply ran numbers. Original payment. New payment. Original loan. New loan. Different scenarios, different rates. The calculations always ended in the same place. More money. Every path required more money. At some point, Ryan stopped looking at the spreadsheet. The problem was no longer mathematical. The problem was timing. Every additional day created uncertainty. Every additional week created expense. The extension that had saved the transaction was slowly becoming another liability. The following morning, Emily logged into the lender portal. A new message had appeared. No decisions, no approvals, just a reminder showing the expiration date of the current rate lock. A date. Nothing more. Yet it somehow felt more threatening than the $26,000 gap, because the cash gap was visible. The rate lock was invisible. One number sat on paper. The other changed in the future. Nobody could tell her exactly how expensive the delay would become, only that it would become more expensive. That uncertainty followed her everywhere. While making coffee, while reviewing documents, even while trying to sleep. The transaction now had two separate clocks. The first was visible. The closing date. Everybody could see it. The seller, the title company, the lender, every document in the file pointed toward the same deadline. The second clock was harder to see. The rate lock. No moving parts, no reminders, no daily updates, just a date sitting quietly inside the mortgage file. One clock measured whether they could buy the house. The other measured how expensive the house would become before they got there. At first, the two clocks had been moving together. Now they weren't. The closing date had already been pushed back. The rate lock hadn't moved at all. Every day increased the distance between them. Every day created a little more uncertainty, a little more cost, a little more pressure. What bothered Emily most wasn't the possibility of paying more. It was not knowing how much more. The cash gap had at least arrived with a number attached to it, $26,000. The rate lock was different. Nobody could tell her exactly what the final cost would be. Only that waiting would make it worse. For the first time since the revised flood determination appeared, Emily stopped thinking about the property itself. She started thinking about time, because every attempt to save the transaction seemed to create another deadline, and every deadline seemed to create another cost. The flood determination had started this process, but now the timeline was driving it, and nobody could explain where it ended. The idea came from Lena, not from the original lender, not from the title company, not from the seller. Lena. By then, she had spent nearly 2 weeks watching the transaction move in circles. The surveyor said one thing, the lender said another, the flood determination said another. Nobody seemed capable of producing a final answer. Only more reviews, more conditions, more delays. Late Monday afternoon, she called Emily. The conversation started differently than usual. For the first time in days, Lena sounded confident. Not optimistic, confident. There was a difference. She had spoken with another lender, a smaller institution, local, not one of the national companies involved in thousands of transactions every month. A lender that actually reviewed unusual properties in southern Louisiana on a regular basis. Emily listened carefully. Lena wasn't promising approval. She wasn't promising better terms. She wasn't promising anything. She was simply suggesting another set of eyes. At that point, there weren't many alternatives left. The original lender still had the file. The cash gap still existed. The rate lock was still running out. Doing nothing was no longer a strategy. The following morning, Emily uploaded every document again. Purchase agreement, inspection report, appraisal, flood determination, surveyor certification, bank statements, tax returns. The entire process started over. The strange part wasn't the paperwork. The strange part was how familiar it felt. 3 weeks earlier, they had believed they were almost finished. Now they were rebuilding the same mortgage file from the beginning. By Wednesday, the second lender had already reviewed most of the documents. That alone felt unusual. The first lender seemed to operate through departments, layers, reviews, committees. The second lender felt smaller, more direct. Actual people answered the phone. Actual people returned calls. For the first time since the mortgage denial, Emily felt like she was speaking to human beings instead of a system. Thursday afternoon, Emily braced herself. The officer continued. The lender was willing to move forward. For a moment, she didn't react. The sentence sounded too simple, too normal. Move forward. After weeks of delays, conditions, reviews, classifications, and warnings, nobody had used language that simple. Move forward. When the call ended, she sat quietly at the kitchen table. Then she called Ryan. He answered on the second ring. For the first time in weeks, he sounded relieved. Not excited. Relieved. The onboarding emails from Baton Rouge had continued arriving throughout the mortgage problems. Parking instructions, orientation schedules, training information. Small things. Ordinary things. The kind of emails people barely notice when life is going according to plan. For Ryan, they had started feeling different. Every new message was a reminder that a job was waiting for him in Louisiana. A future was waiting for him in Louisiana, whether the house was ready or not. The second approval felt like proof that those two timelines might finally reconnect. When the call ended, Emily placed the phone on the kitchen counter and simply sat there for a moment. No new conditions, no new reviews, no new requests. After weeks of explanations, warnings, and delays, that evening, something happened for the first time in weeks. People started making plans again. Not big plans, small ones, practical ones. Questions that had been frozen suddenly returned. Which day should the utilities be transferred? When should the movers receive final confirmation? Which route would Ryan take on the first drive to Baton Rouge? Normal questions. Ordinary questions. The following morning, the transactions started moving again. Emails that had been sitting unanswered suddenly received responses. The title company resumed preparing closing documents. For the first time in weeks, people were acting as though the move might actually happen. Emily opened the lender portal before breakfast. A new file had appeared. Loan approved. Conditional. She stared at the words for several seconds. Approved. It wasn't final, but it was real. The first genuine progress they had seen in weeks. By lunchtime, she had already started organizing closing paperwork. By afternoon, she had begun moving documents into a separate folder labeled Baton Rouge. For the first time in nearly a month, the future felt visible again. Then, just before 5 o'clock, another notification arrived. Updated loan estimate. Emily almost ignored it. The approval was the important part. The estimate could wait. The document looked ordinary at first. Same names, same property, same loan amount, same closing schedule. Then she reached the second page and stopped. The approval was there. The mortgage existed. The transaction could continue. But the numbers were different. Not slightly different. Not rounding error different. Different. Very different. Emily kept reading. Origination charges. Additional fees. Revised costs. New requirements. Line after line after line. The lender had approved the loan. That part was true. But they had priced the risk differently. Much differently. The second lender had seen the exact same property, the exact same flood determination, the exact same surveyor report, and somehow reached the exact same conclusion. Not about approval, about risk. The approval had arrived. The problem hadn't left. It had simply changed shape. And sitting inside that updated loan estimate was the first clue that the second lender might not be rescuing the transaction at all. The approval lasted less than 24 hours. Not because it disappeared, not because the lender changed its mind. The approval was still there. The mortgage existed, the transaction could continue. The second lender had simply attached a different price to it. Emily spent most of Friday reviewing the updated loan estimate. The first lender had withdrawn the mortgage. The second lender had approved it. Yet the two files felt strangely connected. Everywhere she looked, the same pattern appeared. Additional charges, additional conditions, additional costs. The terminology changed. The direction never did. The total kept rising. Origination charges, processing fees, administrative fees, reserve requirements. Line after line. Individually, none of them looked devastating. Together, they felt overwhelming. The cash-to-close figure had increased again. Not by $26,000 this time, but enough to erase most of the relief they had felt the day before. The approval had arrived. The affordability had not. That afternoon, Ryan received another email from Baton Rouge. This one wasn't orientation material. It wasn't onboarding paperwork. It was a relocation questionnaire. The company needed confirmation of his future address, emergency contact information, commuting information, basic administrative details. Normally, it would have taken 5 minutes. Ryan stared at the form for nearly half an hour. The address field remained blank. The company assumed they knew where they would be living. The lender assumed they could absorb additional costs. The seller assumed the closing would happen. Everyone involved in the transaction seemed to be operating inside the same future. Everyone except Ryan and Emily. For the first time since accepting the position, Ryan began considering something he had tried not to think about. What happened if the house didn't close? The job was real. The start date was real. The mortgage was conditional. Those facts no longer fit together. That evening, Ryan opened a map of Baton Rouge. He wasn't comparing neighborhoods. He wasn't researching schools. He was extended stay hotels, short-term rentals, month-to-month apartments, temporary housing. Places somebody might live if they arrived in a new city without a permanent home. One extended stay property sat less than 15 minutes from his future office. The weekly rate looked manageable. Until he multiplied it by a month. Then 2 months. Then 3. Ryan closed the browser. Opened it again. Checked another property. The numbers weren't much better. A few weeks earlier, across the kitchen, Emily continued reviewing the revised estimate. The more she read, the less the approval felt like a victory. The lender had approved the property, but they had surrounded the approval with protections, financial cushions, additional reserves, additional requirements. Every adjustment pointed toward the same conclusion. The property carried risk. The lender was willing to proceed, as long as somebody else absorbed more of that risk first. Late that afternoon, Lena called. For weeks, she had talked about flood classifications, surveyors, and extensions. Now, she sounded different. The transaction had become simpler, and somehow more dangerous. She asked only one question. Could they close? Not whether the property qualified, not whether the flood determination was accurate. Could they close? Emily realized that everyone in the transaction had stopped discussing the cause of the problem. They were only discussing the consequences. After the call ended, she pulled both loan estimates onto her screen. The original approval, the new approval. Side by side. The difference wasn't hidden. It was everywhere. The second lender had not disagreed with the first lender. That realization landed harder than any individual fee. For weeks, she had assumed the lender saw the property differently. One cautious, one reasonable, one wrong, one right. But that wasn't what the document showed. The second lender had seen the same flood determination, the same surveyor certification, the same address, and somehow reached the same conclusion. Not about approval, about exposure. Risk. The first lender avoided it. The second lender priced it. Late that night, Ryan walked into the kitchen. Emily was still staring at the estimates. Neither of them said much. The numbers had started speaking for themselves. The issue was no longer whether they could find a lender. They had found one. The issue was why every lender who touched the file seemed to react to the property the same way. That question lingered through the weekend. Every new fee pointed back toward it. Every adjustment seemed connected to something they still couldn't see. The flood determination had started the chain reaction, but it no longer explained it. There was something larger behind the decisions, something neither lender had fully explained, something that seemed to exist outside the mortgage file itself. The second lender had approved the loan. The first lender had rejected it, yet somehow both institutions appeared to agree on the most important part. The property carried risk. Emily still didn't understand why, but for the first time, she was starting to believe the answer wasn't inside the mortgage file at all. By Sunday evening, neither Ryan nor Emily cared about the flood determination anymore. The document had started the problem, but it no longer explained it. The real question had shifted. Why had two completely different lenders reacted to the same property in almost exactly the same way? One had rejected the loan. The other had approved it with massive fees. Yet both seemed convinced that something about the property carried more risk than anyone was letting on. That question followed them through the weekend. Every fee, every condition, and every delay pointed back toward it. Late Sunday night, Emily opened her laptop one more time. Not to review disclosures or estimates, she wanted an explanation. She started searching. Then, she found an article discussing commercial mortgage underwriting. The title sounded technical, the kind of thing only lenders cared about. But one phrase stopped her scrolling. Private flood models. She had never seen those words before. Not in the purchase agreement, the surveyor report, the FEMA documents, or any lender correspondence. The article referenced a Federal Reserve research paper published the previous year. The link was active. She opened it. The document looked intimidating. Charts, tables, academic language. At first glance, it felt completely unrelated to her life. Then she searched for a few keywords. Flood, risk, lenders, mortgage. Suddenly, the academic paper began describing the exact scenario they were living through. Emily reached a section discussing how institutional lenders responded to environmental risk before official county and federal maps changed. The wording was clinical, but the implication was devastating. Some lenders weren't relying on FEMA maps at all. They were using private flood risk models and external data algorithms to predict future exposure. Emily leaned back in her chair. For weeks, she had assumed everyone was looking at the same map. the surveyor, the county, the insurance agent, the bank. Now, that assumption was dead. The surveyor had been looking at the official current classification. The bank was looking at a prediction. Not where the water had been, but where an algorithm believed the water was going. Ryan sat down beside her. For the next hour, they read the research paper together. The document outlined an industry strategy called loan pricing. It provided the exact mathematical proof for what Emily had suspected the night before. Two lenders could look at the same predictive model. One would reject the loan entirely to keep the risk off its books. The other would approve the loan, but use predatory origination fees and reserve requirements to force the borrower to pay for that risk up front. The Fed paper called it a risk premium. Ryan looked at the revised loan estimate sitting on the table. The origination fees, the extra cushions, the blank lines that had suddenly turned into thousands of dollars. None of it was random. The first lender hadn't made a mistake. The second lender hadn't thrown them a lifeline. Both were reacting to the exact same proprietary data. One avoided the risk, the other priced it. For several minutes, the kitchen was completely quiet. Every event from the past month suddenly looked different. The official flood map said one thing. The mortgage market was already trading on something else. That realization bothered Ryan more than the money. They had followed every rule. They hired the inspectors, reviewed the disclosures, verified the documents, obtained the approvals. Yet the most critical piece of data in the entire transaction existed completely outside the transaction itself. It wasn't in the closing file. It wasn't on the public record. The system hadn't glitched. The system was working exactly as intended. But understanding the mechanism didn't solve the timeline. Monday morning was coming. The closing appointment was still on the calendar. The job in Baton Rouge was still waiting. They finally understood exactly why the lenders had treated the property this way. They just didn't know whether they should sign the papers. Ryan was already working in Baton Rouge when the closing week arrived. During the day, the move looked successful. He had a badge, a desk, a parking pass, a supervisor who expected him in meetings. People asked how he was settling in, and Ryan learned to answer without explaining too much. Getting there. That was usually enough. At night, the truth came back. He would return to the extended stay hotel, loosen his tie, and sit on the edge of the bed with takeout balanced on his knees. The food was usually cold by the time he opened it. Sometimes he checked his bank account before eating, sometimes after. The number never improved. Inspection fee, appraisal fee, storage unit, truck deposit, hotel nights, days off work. Every cost was small enough to explain. Together, they looked like a receipt for a life that had not started yet. 300 miles away, Emily was sleeping badly in a house that no longer felt like theirs. The dining table had already been picked up by the movers. The chairs were gone. A lamp stayed in the corner because she needed one room that didn't feel completely abandoned. Dinner was whatever she could eat without unpacking anything. One night it was a sandwich on a paper towel, sitting on the floor beside a box-marked kitchen. Her phone buzzed while she was eating. Title company. She looked at the subject line and put the phone face down. 10 minutes later, she picked it up again. The email was polite. Routine. They needed confirmation before preparing final closing documents. Emily read it while sitting in the empty space where their table used to be. Then she closed it and did nothing. That was how most of that week felt. Not dramatic. Worse than dramatic. Unfinished. The old house was already half gone. The new house was still waiting. Ryan's job had started. The mortgage could still close. Their furniture was in storage. Their money was tied up in moving plans. Every part of their life seemed to be moving, except the part that was supposed to hold it together. On Wednesday morning, Emily opened the hallway closet looking for packing tape. She found nothing. For years, the closet had collected things they never thought about. Extra blankets, board games, extension cords, Christmas decorations, old photo albums. Now the shelves were empty. Not clean. Empty. She stood there longer than she meant to. That was the first time the house looked like it belonged to someone else. Not sold on paper, not pending. Someone else's. Later that afternoon, Lena called. She did not sound cheerful anymore. She did not sound worried either. She sounded careful. The title company needed an answer. The lender needed enough time to finalize the file. The seller side wanted to know whether they were still closing. Emily listened from the floor of the bedroom, because the bed frame had already been taken apart. A screwdriver was still lying beside the wall. One of Ryan's old t-shirts was folded on top of a box because she had found it behind the dresser. She kept looking at it while Lena spoke. When the call ended, Emily did not call Ryan right away. He was at work. She knew he would answer if she called. That was the problem. He would step outside. He would try to sound calm. Then he would go back into an office full of people who thought his move was going fine. So she waited until night. Ryan called first. The background noise was different now. A hotel parking lot. Cars on a road nearby. A vending machine humming somewhere behind him. Emily was still in the bedroom, sitting on the carpet where the bed had been. For a while, they talked about ordinary things. His first meetings, a rental complex she had found, the storage unit, whether they should keep paying for the larger truck. Then, the conversation ran out of safe places to go. Ryan was the one who finally said it. If we saw that house tomorrow for the first time, knowing everything we know now, would we still make the offer? Emily looked across the room, at the boxes, at the screwdriver, at the t-shirt, at the dent in the carpet where their bed used to be. She wanted the answer to be harder. It wasn't. No. Ryan did not answer immediately. Neither of them cried. That would have been easier. Instead, the silence stayed between them, heavy and plain. For weeks, they had been trying to make the purchase survive. The denial, the revised determination, the new lender, the new costs, the deadlines. Every time something changed, they adjusted. Found another document, made another call, opened another estimate, moved another number. Now, for the first time, they stopped adjusting. The question was no longer whether they could close. They could. That was what made the decision hurt. The mortgage still worked if they were willing to shrink everything else around it. Savings, flexibility, breathing room. the ability to move again if Baton Rouge was only one chapter and not the whole book. That last part mattered more than either of them had admitted. Ryan had taken the job because it was a step forward. A better role, a better salary, a chance to build something. But buying that house would turn the first step into a weight. If insurance rose again, they would carry it. If taxes climbed, they would carry it. If the property became harder to sell, they would carry that too. The house had started as a way into a new life. By Wednesday night, it felt like something that might trap them inside the first version of it. Emily opened the closing disclosure one last time the next morning. The coffee went cold beside the laptop. She did not read every page. She knew the pages by then. What she looked at were the places where their life had been squeezed smaller. The cash to close, the reserves, the projected payment, the insurance line, the taxes. Each number was survivable. That was not the same as acceptable. At 8:43, she wrote the email. She deleted the first version because it sounded apologetic. She deleted the second because it explained too much. The third one was short. They had reviewed the final terms and would not be moving forward with the purchase. She stared at it for almost a full minute, then sent it. The first reply came from Lena, then the lender, then the title company. By lunch, the closing appointment was no longer on the calendar. That was all it took. No judge, no hearing, no dramatic confrontation, just a few messages moving through inboxes until the deal that had consumed their lives became a file nobody needed to update anymore. Ryan saw Emily's text during his break. Sent. That was the whole message. He stood outside the building for a minute before answering. Okay. Then he went back inside. 2 weeks later, Emily arrived in Baton Rouge with the first load of boxes. Ryan met her in the parking lot of the apartment complex. He looked thinner than he had when he left. She probably did too. Neither said that. They carried boxes upstairs until both of them were sweating through their shirts. The kitchen cabinets stuck when they opened. The bedroom window faced the parking lot. A neighbor's dog barked every time someone walked past the stairs. None of it looked like the plan. That night, they unpacked exactly one box. Coffee mugs, a frying pan, 2 plates. Enough to make the next morning possible. Ryan put his work badge on the counter and took the trash down before bed. Emily stayed in the kitchen, peeling tape off the empty box. Her phone was on the counter beside her. No unread messages from the lender. No title company reminders. No revised estimate. No request for one more document. For a long time, she just stood there, listening to the apartment settle. The refrigerator clicked on. A car door closed somewhere outside. Water moved through the pipes behind the wall. Normal sounds. Small sounds. Nothing urgent. She picked up the phone once, not because it buzzed, because she was used to checking. The screen was blank. Emily set it back down, then folded the empty box flat and leaned it against the wall.